So what does the combination of all these factors mean for stocks? Joining me now is Hugh Johnson, Chairman and Head of Investment Strategy at Hugh Johnson Advisors. Hugh, what do you think? Is this inflation thing transitory or not?
Yeah, I definitely think it is. I do a lot of number crunching, Jonathan, and I do a lot of crunching on the inflation numbers, and we're going to have some troubling numbers, not only for the second quarter, not only for the month of April like we saw this week, but for the coming months. But when we get past 2021, when we start into 2022, you're going to see much better numbers. Now, what do I mean? I really mean we're talking 3 to 4% year-over-year numbers for the time being, and that means, say, the next 1, 2, or 3 months. And those are pretty numbers that are going to be pretty disturbing. But when we get into late 2021 and 2022, the year-over-year numbers are going to come to 2.2%. That just simply says that this is all transitory. Hard to believe now, but all my numbers point to that very outcome. So I'd be optimistic on it. There's a lot of stocks that have been really hit hard because of concerns about higher inflation and higher interest rates. And those are the ones that have been hit so hard. Dominic referred to them. He talked about consumer discretionary. He talked about technology. That's where you can find some real value right now, and you won't have this value for very long.
Well, Disney's taken a little bit of a hit year to date, and it's down another 2+% today, but you like it. Why?
You know, it's obviously everybody's troubled by the numbers and the streaming numbers. The number of new subscribers was a little bit disappointing. That was bad news. Of course, the other news, theme parks, movies, that also was not good, primarily because of the long-term lockdowns and problems we've had with the U.S. economy. You know, in time, and this is the important thing, in time, we're going to see the economy recovering. It's going to be uneven, not the same, not even month to month, but we're going to be seeing a recovery through the remainder of 2021 and 2022. And as we see that, it's going to show up in the numbers of Disney, and it's certainly going to show up in their earnings. So this is an opportunity, in my judgment. It's a little risky. I understand that. I understand the concerns about valuation. So maybe you take half a position now and wait a little bit for the other half of the position. But in my judgment, opportunities in technology, consumer discretionary, and a company like Disney don't come along every day. And when they do come along, you've got to have a little bit of courage and step up and maybe start to build your positions.
Shepard Smith here. Thanks for watching CNBC on YouTube.